a friend of mine reached out to me saying there's a great tech company. The CTO of a previous company is starting a company. He needs some business mentoring. You understand tech enough. Can you spend some free time to mentor him? I said, this sounds good. I started off. About a year of mentoring around 2010, I really liked what I was doing. And by the time the whole concept of startups was starting to grow, and 2011, a bunch of friends, and we used to call ourselves the bus stop gang because all our children used to go to the same school. The dad used to come and drop the kids to the bus stop, and then the dads after the bus left would shoot the breeze and try and figure out how to make the next million. So all the dads got together and decided that we must do angel investing. So we somehow sourced a couple of companies, and in 2011 we made 2 investments, and we thought, we've arrived in life now. We are now angel investors, and now the next thing is a trip to wherever we want.
Hi everyone, and welcome to the first session of IIM-CAN. My name is Arun, as you can make out from the screen, and I'm a pass out of 1991 batch. Dr. Jayjit Bhattacharya dominated the idea of this initiative, and Aso took up the cudgels to start this. He joined hands. He enrolled me and Sandeep to make this initiative into a practical solution. Prabir, Panappa and Subrat will speak about 10 to 15 minutes each separately. Then we will talk about why IIM-CAN. The first person I would like to introduce is Prabir Chatterjee. Prabir is an alumnus of 1985 batch.
Hi everyone. Thanks Arun for the introduction, and thanks to Arun, Aso and Sandeep for taking this initiative to start this IIM-CAN network. I think it's an idea whose time has come. Angel investing is my like second job or passion or hobby. So we are trading as angels, and we have to be careful because we are trading on other people's dreams, the startup entrepreneurs. Okay, so I thought before I start, I just want to, make it a little interesting that how to recognize an angel. So there are certain physical characteristics, you can say. You can see it on the screen. Basically somebody who is eager to give his money to others, in the hope of 100x return. Okay, so that's how the angel looks pre-investment, and at the end of the PPT, I'll tell you a little bit about how they look post-investment. But wait for that. So I think before we start anything about angel investing, just a little bit of caution to everybody. I suppose that most of the people who are here and interested in becoming angel investors are already angel investors. So I'm here wearing here more my wealth manager hat, and just to be, I think we have to be very clear that angel investing cannot be your only bet. It is part of your asset diversification strategy, and I would recommend that you just invest only that much which you can afford to lose completely. And you have to be prepared for a longer time horizon. It's not like you can get in and get out very quickly, so you have to be patient. But still people do that. I mean, why do people still do angel investing? And my based on our experience, I would say that because it is much more interesting than just simply buying shares in some company. Where do you find the potential opportunities to invest, and because that is a difficult thing. I mean, you have to be you have to scan the horizon through many channels like angel networks, and I guess IIM-CAN will become one of them. Bit about the types of angel investing. So you can do passive investing, which is a shotgun approach where you basically spread your bets. Like if you have whatever money, once you have to invest, you can spread it between 20 companies or 10 companies, whatever, or whatever is your amount, and it requires low time commitment. The other is active investing, where you do proper, search and due diligence and choose the company you want to invest in and be actively engaged in that in terms of mentoring, etc. And a mix of the two, which is like, pooling with active investors. So you have a group of people who are active investors, but you know them, you trust them, so you pool with them. So that's what most people do. Just a quick recap. I think everyone probably knows this, but basically there are just three critical. There are many things. Each investment opportunity is obviously unique in itself, but there are three broad things which we look for, which is that the market size of the product or service is large. Second most important is the promoters should have the capability to execute. So create value, whether in terms of sizing up the business or creating some kind of asset like intellectual property which can monetize. So the capability to execute. So the promoter, kind of assessing the promoter's capability is the key thing. And the third most important thing is that there should be an exit roadmap, because more often than not, the most difficult thing is how to get an exit from startup. Just a quick thing on the entrepreneurs. That's the most important thing in our opinion. Between the three which I showed earlier, so capability, integrity, and of course the adaptability. About pivoting, so the learning and readiness to change if things don't work out and move in another direction. That's very important. A little bit about, as active angels, what we see, where we add value, and this is very critical. One of the biggest learnings we had over the past few years, mentoring is a critical thing. While many people discount that, including the promoters, startups which can be mentored or which are willing to be mentored do better. Strategy guidance from time to time is very important, because strategy has to change over time. Providing the right connects through our network. So basically, whether it is new customers, new investors, new vendors, even talent acquisition, all of these connections play an important role. And I think that's where, like, the IIMC alumni network will be a great strength for people in this group. Not everybody, not every angel investor has that kind of network that we have as IIMC alumni. One thing we found that personal counseling plays a big role. So, and particularly of the key promoters. And another very important thing from the operations perspective is making sure all compliance issues are taken care of. So just, as I mentioned in the beginning, that gray matter and greenbacks, we are 4 batchmates, Sureel, Nishesh, Rabin, and myself. And so far, we are enjoying the ride. We have so far been engaged with 5 startups. As I promised in the beginning, so this is how to recognize an angel post-investment. Things change. But hopefully they still have bulging pockets, money. One of the things that in startups which we often find is that while the business per se may be doing well and profitable and all that, it may not be able to scale up and get the next round of investment. So exit becomes difficult. Thanks, everyone.
Thanks, Prabir. So next person I would like to invite is PG Punappa. He is a pass out of 1986 batch.
So thanks to you, Aso and Sandeep, for this session. I think it's a very interesting opportunity to share a reasonably exciting space. I'll share my journey of how I ended up doing what I'm doing and some of the learnings which happened thereupon. I first started mentoring a company more accidentally than anything else, because I liked mentoring in 2010 when I was still working. And a friend of mine reached out to me saying there's a great tech company. The CTO of a previous company is starting a company. He needs some business mentoring. You understand tech enough. Can you spend some free time to mentor him? I said, this sounds good. I started off. About a year of mentoring around 2010, I really liked what I was doing. And by the time the whole concept of startups was starting to grow, and 2011, a bunch of friends, and we used to call ourselves the bus stop gang because all our children used to go to the same school. The dad used to come and drop the kids to the bus stop, and then the dads after the bus left would shoot the breeze and try and figure out how to make the next million. So all the dads got together and decided that we must do angel investing. So we somehow sourced a couple of companies, and in 2011 we made 2 investments, and we thought, we've arrived in life now. We are now angel investors, and now the next thing is a trip to wherever we want. That's when the hard reality struck us. One company sank in 12 months. It was a case of fraud. We were honestly swindled. We chased the founders later because the group was quite angry, put them in jail for about a month, but paisa to gaya. And in the second case, we found that the company steadily went downhill and refused to listen to any advice. And about 18 months, they also went dry. And the rest of my friends said, "Arey, bahut ho gaya. I'm not doing any more angel investing." But I was seeing my first company where I was actually only mentoring doing extremely well. And we had already pivoted from a B2C to a B2B. We went through all the chaoses. But here was a CEO who was hungry for being coached, hungry for mentoring, willing to listen. And like Prabir said, the whole importance of mentoring is extremely important at these. You may be a good tech guy. You may not know pricing. You may not know strategy. You may not know HR management. You may not even be able to know how to spin a good story. So over a period of time, that's what the story went. So I would go and evaluate a company, spend 3 months doing all the DD, which Prabir has covered. The only one point that I want to add in that was a very important factor for me is to see the moat that he can build in whatever he is doing. And my belief was that if I work closely and do active mentoring along with the angel investing, can you improve that 10% to 40%? Because then the math becomes totally different. And that was a goal which I set. Today, I've been actively doing this for 9 years full time, plus a couple of years part time. It's like Arun said, I've had 5 closures, 2 exits, and 3 failures. And there's a lot of learning in the failures. And I'll share some of the learnings. The first failure was in a B2C company. We were doing a pregnancy and early motherhood app. But we found that VCs did not like the metrics that our pregnant moms were having. And they said, oh, in other social networks like Facebook, people coming every day, your mom is coming every week. We don't like the math. And in the B2C space, unless a VC comes in, as an angel, you are by and large dead. You have absolutely no hope in it. The second and third failures which I had were companies where the CEO was a brilliant domain expert, but did not have a strong tech co-founder. If you're looking at tech, there has to be a tech co-founder, non-negotiable. The other thing which I have done in this whole process is, what I call this whole process, which I run as something like a deep incubator and mentoring process for these companies. And I work very closely with them for years. One very important factor which I have found in the mentoring space with the startups is the ability to tell the CEO what not to do. Today, I've reached a situation where if the company doesn't get a strategic focus very quickly, I come down like a ton of bricks and tell them, if you don't do this, you are dead. And literally, I've given them multiple examples. The other thing which I wanted to leave here is this whole issue of how you can open a network. All the angels, other than strategic mentoring and counseling, they need more funds and they need network and business. What I've been able to achieve in the last 10 years is some sort of a personal club. Think of it as a very informal club of 150 angels who have invested in the 15 companies that I have worked in so far. 15 of them are from IMC, about 11 of them are classmates of mine, and 3-4 are from a couple of batches, senior and junior, this way and that way. These 150 people are in a very different set of ecosystems, and that helps open networks like nobody's business. And that's a big value that you can bring to a startup when you do that. But I'm extremely happy with the initiative that IMC is looking at. The portfolio that you guys are in, the experience that you guys bring to the table is unmatchable and can make a substantial impact to the ecosystem. Thank you very much. Arun, over to you.
Yeah, thanks, Punappa. The last person I want to introduce is Subrat Pani. He brings the other side of the table, which is he's an entrepreneur. And Subrat is a 1995 pass out.
Thanks, Arun. Firstly, thanks to you, Aso and Sandeep, for putting this whole thought and taking it to action. I think we always keep talking about it, but it's finally there. And now all of us are here talking about it. So I think it's a great initiative, and there is a lot of need. Here there is me, who is an entrepreneur also, as an accidentally an angel investor. In my experience, I'll just share with you why I mean, of course, driving my venture and company, and alongside that, I was doing all these things. So I think there are a couple of takeaways. So just to share with the audience how interesting and how risky it can be. So out of this seven, there are three which are no more there. And Ponnappa spoke about 5 years, but I use a thumb rule 1,000 days. So if a company doesn't survive 1,000 days, I mean, basically, if it has to survive, it will survive 1,000 days. That's an important milestone. And there are three more which are doing good. One of them is in kind of getting into Series B, and the other two are in pre-Series A, but okay, have strong growth and this thing. As an asset class, I mean, that's what Pravir was talking about. You know, all investments are mostly rational. There are a lot of modeling, there are a lot of analytics, there is a lot of algorithm, a lot of quantitative. Why this as an investment class is the most difficult one? Because there is emotions. I think the why do you want to become an angel investor? I think that's the question where you should spend maximum time. There are a few things which I've learned along the way. I think most of it has been spoken by the experts. So I think how much time you can give and how frequently you want to stay engaged, that's I think is really critical. I think it has been already spoken about, but I'm just taking out the big ones. You really need to be very, very patient. You need to have your personal time to get involved and to work very closely. So the third most important point which Pravir articulated very nicely was that, do you have investable surplus that you want to throw away? So if there are more people who are validating, the more angel investors, seed funds, more people involved and willing to write a check, is a clear validation. It's like not you have validated, but 5 other people are also validating, or 10 more people are validating the hypothesis. So I think that's those are some of the things you should never be doing, and these are all learning from the past. So I think there are a lot of solve for how to go about it, and we spoke about that. Like the safest way could be to be a passive one and write small checks, be part of a network, and then get involved, like the dual hybrid model where you're a passive investor through an angel network, and then you are also involved actively with one or two, and you start your journey from there. If it is the adrenaline rush, the passion, and the joy of building something along with somebody, that's the key motivation. You should be willing to put more time and attention and have a long-term perspective. That's what I have learned. So thank you, thanks for inviting, and great to be here.
Thanks a lot, Subrat. Thanks, Subrat. And now I would like to invite Sandeep to talk about what is the IIM-CAN way and walk through how we want to do things in the IIM-CAN. Sandeep?
Sure, thanks, Aaron. I'll just share my screen. Hello, everyone. My name is. So, one of the important metrics that we look is to improve the odds of success for startups. During this journey of finding product market fit, it generally raises the seed and pre-series phase. These are generally the stages at which IIM-CAN enters or is interested in. So we refer to the process of finding the entrepreneur or the right startup as the investment process, and it ends with IIM-CAN basically trying to match the angel with the entrepreneur. Then we look at the growth process, where we are very interested to understand how this startup can achieve various growth milestones so that it is nurtured and it is well prepared for the next important process of exit. This exit process is actually more to do with finding the right next set of investor who is ready to invest in the business so that there is an exit for the angel. So in the investment process, that is finding the startup, Hackstrap comes into picture. Hackstrap is trying to build an ecosystem for startups. So we want to build a collaborative way for private companies to match and find and work with investors. So we have developed important parameters to do the same. C-Marketplace is especially trying to look at matching entrepreneurs with business leaders so that very important steps and processes can happen. And we'll look more closely into what they are very soon. And Edge IB Services is a boutique iBank, which is basically focused on trying to help startups which are ready to raise the next round of funding. Hackstrap tries to look at things like screening, deal flow, and due diligence. Screening in the sense of trying to reach out to startups for them to apply and ensure that we select some of the startups which make sense for IIM-CAN. Deal flow is to ensure that there is a steady flow of good deals so that investors can consider them and then decide if they want to take it to the next step. And due diligence is kind of a final check to ensure that it is well prepared. It is meeting all the essential requirements for it to get the funding, to raise funding. If the startup raises funding, what happens with C-Marketplace is that it helps the startup in the growth process, and it does in 4 primary ways. One is traction. What we mean by traction is that a startup should be able to get preliminary set of the initial clients or some pilots which will help it to understand its customer base better, understand better its product market fit, and other things. So that is one way C-Marketplace helps the startup in achieving early traction. Toolkits are ways to try out interesting products and services, which are again part of the C-Marketplace ecosystem, which will help them to do things in a much more accelerated manner and in the right way. So there's no loss in terms of finding the wrong service or wrong product, which wastes your time and also money. Intros are basically a C-Marketplace way of saying that sometimes, as a startup, it becomes very difficult to approach someone and pitch your product or even get a particular green signal for them to engage with your product. So intros are a way which facilitates for a startup to very easily get that kind of a connection, which helps them to get more feedback and more product trials. And CEO Quora is actually a form of mentoring where startups, when they come into picture of trying to understand, dealing with various bottlenecks, trying to understand what is the best way to go about it, or trying to understand a space, get more mentoring or feedback. All these things are covered under the CEO Quora, whereas the founders are going to engage with different stakeholders to essentially learn, adapt, and grow their understanding of the market and other areas. So, and then Edge IB Services, what the role it's going to play in the process of exit primarily is to ensure that the deal, which is the deals which have finished the due diligence process, are now in a stage where the deal is being executed, and the final deal lead is trying to take it forward and ensure and prepare everything so that the deal, finally the money is raised by the startup. Pipeline is a way to ensure that all the startups which are invested by IIM-CAN are in such a way that the next logical investor is ready to pick them up, and when they are ready to pick them up, the process of exit starts. So this is the whole IIM-CAN ecosystem. Thank you, guys.
There's so many opportunities which are there, which you can even do when you have a job also. Of course, angel investing is just one part of it. There's way many more where you can actively help.
So before I wrap up, I request everyone who is still not enrolled as a angel or mentor to do that.
Thank you so much, Arun, for that reminder again.
Thank you. Thanks, guys. Thank you.
Thank you, Subrat.
Thanks, everyone.
Thank you, Prabir.
Thank you, Prabir. Thank you, Subrat. Thank you, Ponapa sir.
Thank you,
everyone. Bye-bye.
Guys, thank you so much.